Ask any American who owns the Federal Reserve, and you'll get a few different answers. Most will say the government, some will guess it's private banks, and a few will just admit they have no idea. The crazy part? Almost all of them are wrong. Because the truth about who owns and controls the Fed is deliberately hidden, obscured by complex corporate structures and buried in legal documents nobody ever reads. The Federal Reserve is not what you think it is. It's not a government agency, but it's not exactly a private bank either. It exists in a legal gray zone, specifically created to shield it from accountability. And the people who benefit from this setup? They want you to stay confused. Because if Americans really understood who owns the Fed, who profits from it, and how it actually works, there would be riots in the streets. Before we pull back the curtain, let me know where you're watching from. Drop your country in the comments below. And if you're ready to find out who really controls America's money supply, hit that subscribe button. Because what you're about to hear will fundamentally change how you see our entire financial system. Let's start with the official story, the one they teach in schools. The Federal Reserve System was created in 1913 to stabilize the banking system and manage the money supply in the public interest. The Fed's own website says it's not owned by anyone. Sounds reasonable, right? A public agency working for the common good. But that's a carefully crafted lie. The Federal Reserve is owned. It has shareholders, it pays them dividends, and it operates for profit. And those profits go straight to private banks, not the American people. Here's the breakdown. The Fed has three main parts: the Board of Governors, the 12 regional Federal Reserve banks, and the Federal Open Market Committee. The Board of Governors in Washington, D.C. is the part that looks like a government agency. Its 7 members are appointed by the president. This creates the illusion of government control. When you see the Fed chair testifying before Congress, you think you're watching an accountable public official. You're not. The real power lies in the 12 regional Federal Reserve banks. And this is where the deception gets deep. Each of these 12 banks is a private corporation. Let me repeat that. They are private corporations owned by private banks. Every commercial bank in the system is required to buy stock in its regional Fed bank. This stock pays a guaranteed 6% annual dividend by law. So the Federal Reserve is literally paying private banks a guaranteed 6% return, risk-free, no matter what happens to the economy. Now, the Fed will tell you this doesn't mean the banks own them. They say the stock is special, that it can't be sold on the open market. This is technically true, but it's a smokescreen. The stock still represents ownership. The banks still get their dividends, and they still elect directors to the boards of the regional Feds. The system exists to serve the interests of these member banks, not the American people. So, which banks are we talking about? The Fed doesn't publish a list of its shareholders. Why? Because they don't want you to know. But by digging through financial statements and research, we can see who the biggest owners are. We're talking about the giants: JP Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, and Morgan Stanley. These banks own the largest stakes, receive the biggest dividend payments, and have the most influence over Fed policy. For example, the New York Fed is the most powerful of the 12 regional banks. Out of its total capital stock, JP Chase owns a huge chunk. So does Citigroup. We're talking about hundreds of millions of dollars worth of stock for each of them. This means JP Chase earns roughly $24 million a year just from its Fed dividend. Citigroup pulls in about $21 million. It's a direct transfer of wealth from American taxpayers to the biggest banks. But ownership is only part of the story. Control is what really matters. The board of directors for each regional Fed is elected by the member banks. Not by you, not by the government, but by the banks themselves. These boards are almost entirely composed of bankers, making decisions about interest rates, money supply, and bailouts, decisions that directly affect their own bank's profits. This isn't a government agency. It's a private banking cartel serving itself. The scam becomes even clearer when you follow the money. The Fed creates money out of thin air. This new money enters the economy primarily through the banks, who get it first at the lowest interest rates. They then lend it out to everyone else at higher rates, making a pure profit created from nothing. The Fed also earns billions in interest on government bonds, interest that American taxpayers have to pay. After paying its expenses and the 6% dividend to the banks, the rest is returned to the US Treasury. They use this to claim they're serving the public, but it's a magic trick. Taxpayer money goes to the Fed, which pays the banks, and then gives the leftovers back. It's a circular flow designed to extract wealth from you and funnel it to Wall Street. This whole system was designed in secret. In 1910, 7 men representing the Rockefeller, Morgan, and Rothschild banking empires met on Jekyll Island to draft a plan for the Federal Reserve. There were no representatives for the public, farmers, or small businesses. Just the biggest bankers in America, creating a central bank that would serve their own interests. They called it federal to sound official and created 12 regional banks to hide its centralized power. The bill was rushed through Congress right before Christmas in 1913, and the American people have been paying the price ever since. Ever wonder how the Federal Reserve really works? It presents itself as a government agency, but the truth is, it's a private banking cartel with a clever disguise. And the key to this illusion is legal immunity. The Fed has special status that shields it from accountability. Congress can't control its budget because the Fed funds itself through its own operations. This means politicians can't use the power of the purse to influence its decisions. You also can't file a Freedom of Information Act request to see what's happening inside. Their internal communications and decision-making processes are kept secret. Most shockingly, the Government Accountability Office, or GAO, is banned from auditing the Fed's most critical functions. They can't audit monetary policy decisions, transactions with foreign central banks, or the emergency loans given to private banks. A government agency that literally creates our money is exempt from a full government audit. Why would a public institution need that much secrecy unless it has something to hide? On top of that, you can't sue the Fed for damages. If their policies cause massive inflation that wipes out your savings, or their interest rate hikes crash your business, you have no legal recourse. This combination of budget independence, secrecy, and legal immunity makes the Fed like a fourth branch of government, but one that isn't really part of the government at all. So, who's actually in charge? The real power lies with the Federal Open Market Committee, the FOMC. They set interest rates and control the money supply. The FOMC has 12 members. 7 are appointed by the president, but 5 are presidents of regional Federal Reserve banks. And here's the kicker. The president of the New York Fed is a permanent voting member. Every single year. Why? Because the New York Fed is the most powerful. It's on Wall Street, it implements Fed policy, and it's where the real action happens. And who runs the New York Fed? It's always someone from Wall Street with deep ties to the biggest banks. Take William Dudley, former chief economist at Goldman Sachs. He became New York Fed president and oversaw the bailout that rescued the very banks he used to work with. Or Timothy Geithner, who went from New York Fed president to Treasury secretary, and then to a private equity firm. This isn't a coincidence, it's a revolving door. The system is designed to have bankers regulating themselves. The 2008 financial crisis is the perfect example. When big banks were about to collapse from their own reckless bets, the Fed secretly loaned them over $16 trillion. This wasn't approved by Congress. The banks that received these loans, JP Chase, Citigroup, Goldman Sachs, are the same banks that own the Federal Reserve. They used their own institution to bail themselves out. We were told this was to save the economy, but we could have let the bad banks fail while protecting depositors. We didn't, because the people in charge came from those banks and would return to them. They got trillions in loans at near zero interest, while everyday Americans lost their homes and jobs. This isn't a theory. This data was forced out by a lawsuit. Today, the situation is even worse. The 6 largest banks in the US, JP Chase, Bank of America, Citigroup, Wells Fargo, Goldman Sachs, and Morgan Stanley, control over 70% of the nation's banking assets. They hold the biggest ownership stakes in the Fed and have the most influence. Every crisis, from the pandemic to recent bank failures, just makes them bigger. Defenders say the Fed returns its profits to the Treasury, but that's misleading. Those profits come from interest on government debt that taxpayers pay for. The banks take their cut, a guaranteed 6% dividend, right in the middle. And when the Fed loses money, like it did recently, the Treasury gets nothing. But the banks still get their dividend. Heads they win, tails you lose. This system directly affects you. When the Fed prints money, it's inflation. Your savings buy less. But the banks get the new money first, before prices rise. They profit from inflation. Interest rates are set to help banks, not savers. Low rates punish retirees and destroy the value of your savings. And when bailouts happen, you pay for them through that hidden tax of inflation. It's corporate socialism for the banks and harsh capitalism for everyone else. Understanding this structure is the first step toward demanding change. Thanks for watching. And if you found this valuable, please like and subscribe for more content that pulls back the curtain. You might be surprised to learn that the Federal Reserve isn't just an American institution. Foreign banks can, and do, own a piece of it. If they operate in the US, they have to buy stock in the regional Federal Reserve banks. Take Deutsche Bank, the German giant. They own about $200 million in New York Fed stock and get dividends every year. Same with Switzerland's UBS and Britain's HSBC. This was by design. One of the Fed's architects, Paul Warburg, represented European banking interests. He wanted the Fed to be integrated internationally, and it is. The Fed works closely with the Bank of England, the European Central Bank, and others. During the 2008 crisis, the Fed provided over $10 trillion in currency swaps to foreign central banks to keep the global system stable. This shows the Fed's true nature. It serves the global banking system, not just America. This influence doesn't stop at international borders. The same banks that own the Fed also have massive sway over US government policy. In the 2020 election cycle, the financial sector spent over $3 billion on political contributions, more than any other industry. They give to both Democrats and Republicans, ensuring that no matter who's in power, banking-friendly policies get passed. It's why you see bipartisan support for the Fed's independence and opposition to more oversight. There's also a revolving door. Treasury secretaries often come from major banks, serve in government, and then return to the private sector. It's a well-oiled machine that aligns government policy with Wall Street's interests. This isn't a conspiracy, it's just how modern politics and finance work together. So, what would more transparency at the Fed reveal? After the 2008 crisis, legal pressure forced the Fed to disclose some of its emergency lending data. We learned the total was far larger than stated, and the recipients weren't just American banks. The list included foreign banks, corporations, and international entities. This was a shock to many, but the disclosure was limited. The internal discussions and decision-making processes remained secret. While there was public outcry, the fundamental structure of the Fed didn't change. It shows how much power operates behind a veil of secrecy and how difficult it is to get a complete picture. But are there alternatives to this system? Absolutely. Look at the Bank of North Dakota. It's a state-owned bank, created back in 1919. It has no private shareholders, so its profits go back to the state, funding local development. This model works. North Dakota sailed through the 2008 crisis with low unemployment because its bank wasn't gambling on risky financial products. It focused on serving its community. This proves that public banking can be stable and effective. Imagine a national system like this, one that serves the public interest instead of private shareholders. It would require a massive political overhaul, but it's a powerful idea. Let's look at recent Fed actions. When the pandemic hit in 2020, the Fed pumped over $4 trillion into the economy. Where did it go? Mostly into financial markets. The Fed bought securities from large financial institutions and even corporate bonds for the first time ever. This propped up asset prices, making the rich even richer. Then, in 2023, when regional banks got into trouble, the Fed stepped in again with emergency lending and guarantees. They maintained stability, but it was another bailout for the financial system. These actions show the Fed's priority is clear: protect the banks and the markets, while the public gets the secondary effects. So why don't we change this system? Many politicians have tried. Bills to increase Fed oversight have been introduced, and polls show the public wants more transparency. But these efforts always fail. The Fed argues that political oversight would threaten its independence, and the financial industry lobbies hard to keep the current structure. The Fed's balance sheet has exploded from $800 billion in 2008 to over $8 trillion today. This was done by creating money digitally and funneling it through a handful of large banks who earned massive fees. This system is deeply entrenched. Changing it requires overcoming immense political and financial power. The debate over the Fed's structure is really a debate about who controls our money and ultimately, who holds the power in our democracy. Let's talk about what the Federal Reserve's ownership structure means for the future of the American economy. The Fed's balance sheet has exploded from $800 billion in 2008 to over $8 trillion today. That's a tenfold increase in just 16 years. This expansion is money creation on a scale we've never seen before. The Fed bought trillions in government bonds and other assets. So, where did it get the money? It didn't. It created it. Electronically, out of thin air. This is how modern money creation works. The Fed doesn't print cash, it just creates digital entries on a ledger, crediting bank accounts with money that didn't exist a moment before. And who benefits? First and foremost, the very banks that own the Fed. The Fed buys assets from what are called primary dealers, big banks like JP Morgan Chase, Goldman Sachs, and Citigroup. These banks buy bonds from the Treasury and then sell them to the Fed for a guaranteed risk-free profit. Over the years of quantitative easing, these dealers made tens of billions just from this spread. It's essentially a wealth transfer from the Fed to its owner banks, while the public pays the price through inflation. This also creates huge future problems. The Fed bought these assets when interest rates were low. Now that rates are up, those assets have lost value, over $1 trillion in unrealized losses. If the Fed were a private company, it would be bankrupt. But it can't go bankrupt. It can just print more money to cover its losses. This is the ultimate privilege of owning the money printer. But that money creation causes inflation, which destroys the currency and can eventually lead to economic collapse. The owners profit from this cycle, so they have no incentive to stop. There's a deep philosophical problem here too. In a democracy, the government should be accountable to the people. But the Federal Reserve is accountable to banks. It serves its shareholders, not the public. This power was granted by a law rushed through Congress in secret. Even President Woodrow Wilson, who signed the Federal Reserve Act, later said, "I have unwittingly ruined my country, the growth of the nation, and all our activities are in the hands of a few men." He realized, too late, he'd created a system where a few private banks control the nation's money. Thomas Jefferson warned us about this 200 years ago. He said, "Banking institutions are more dangerous to our liberties than standing armies." He predicted that if private banks controlled the currency, they would deprive people of their property until their children woke up homeless. He was right. The Fed has presided over the greatest transfer of wealth from the middle class to the ultra-rich in American history. So, what should be done? First, a full, transparent audit of the Federal Reserve. No exceptions. Second, eliminate the private ownership structure. Nationalize the regional Fed banks and make it a fully public institution, like the central banks in most other developed countries. Third, close the revolving door between the Fed and private banking. No more regulators coming from the industry they're supposed to regulate. Fourth, restrict the Fed's emergency powers. No more secret bailouts for failed banks at public expense. If a bank fails, let it fail. That's accountability. And fifth, if the Fed is going to create trillions of dollars, that money should be used for public good, like building infrastructure or funding education, not just inflating asset prices for the rich. But this won't happen easily, because the banks that own the Fed also own the politicians. Real change starts with public awareness. It starts with you understanding who owns the Fed and how it really works. Here is the bottom line. The Federal Reserve is a privately owned banking cartel that profits from controlling America's money supply. It operates in secret and transfers wealth from you to the largest banks in the country. This isn't what they teach you in school, but it's the provable, undeniable truth. So what will you do with this truth? The Fed's private ownership is destroying the American middle class and making your children's future bleaker. It's not bad luck, it's by design. The system is working exactly as it was designed to. Here's my question for you. If private banks own the Federal Reserve, profit from its operations, and control its policies, how is that any different from a government-granted monopoly that extracts wealth from the public for private gain? Drop your answer in the comments. Did you know this before? Are you shocked? Hit that subscribe button for more truths the financial system tries to hide. Share this with someone who thinks the Fed is a government agency or who doesn't understand why they keep getting poorer despite working harder. The only question left is, will you let it continue? Thanks for watching.